Well, if you're looking at ways to develop high probability strategies, our guest is Scott Andrews. He's going to talk to us about that today. Scott, what tips do you have for us about high probability strategies, how to create your own?
Well, first and foremost, I'm a big believer in never relying upon one historical view of a setup, right? Because it may be right, it may be wrong. You have no check and balance for it. So personally, what's worked for me is using multiple filters, 3, for example, looking at each setup historically from 3 completely different angles or approaches. So as I like to say, if it looks like a duck, walks like a duck, quacks like a duck, it's probably a duck. So as you can see on this slide here, I like to look at my range trades, my first hour range trades, which is simply either fading the high or low, or going long or short at the high of the first hour of the day or the low of the first hour of the day. And the way I identify historically robust setups is I use 3 filters. The first one is yesterday's price pattern. Did we open low and rally all day? Did we open high and sell off all day? Did we finish with a doji, etc.? The second one is what I call the gap zone, or the opening price area. Where did the market open relative to the prior day's open, high, low, close range, low and closing prices? And then the third way I look at it is I look at the price action for the first hour. Similar to the prior day, but I'm looking at, did we open low and rally all hour of the day, or did we sell off during the hour, or did we do something in between? So by looking at whether to fade or break out the high and low of that first hour, 3 different ways, I just trade the ones that generally have at least 2 of those criteria, and ideally all 3 criteria, showing me a strong historical setup. And it's a great check and balance, and it results in good win rates and very good profit expectancy.
The reason I like this is very specific things you're looking at, very specific rules to decide which trade you're going to take. It's probably a good idea for new traders to have that much definition.
It's a good idea for old traders like myself to have that much definition too, because I know enough to be dangerous, right? I mean, we all know, we hear, we know, we're aware of a lot of things going on in the market at any given time. You can have lots of charts, lots of symbols, lots of things going on that can distract you from focusing on what historically has been the best setups for each day.
Scott, thanks for being here.
Thank you.
You're watching the MoneyShow.com video network.